Hey y'all, Jeremy Goodrich, owner of Shine Insurance. Today, I'm going to really open up the books to you, show you exactly how we grew from 0 to 5 million. And the big point I want you to get from this video is not that it's some exponential growth that just blew up right from the beginning. Our choice was to take this slow and steady, and we're going to show you exactly how we did it. So let's get right into it. Look, we started with our values, and they were really simple. We knew we wanted to grow slow and steady. We did not want to take big risks, right? Insurance is all about protecting risk, but owning a business is all about how much risk you are willing to take. We were not willing to take tons of risk. We did not want to lose our house, lose our life, lose our livelihood, anything like that. We wanted to take it slow and steady. So we decided that we were not going to take any major debt in the process. And really, we ended up not taking almost any debt at all. We wanted to make sure that we were service first the entire time. That has cost us money. That has meant that we have had higher expenses, and we'll talk about that in the video. And then we want to concentrate to grow and then diversify to protect. And we'll talk about what that means over the course of this video. So our goals were really simple. We wanted to have 20% income growth every year. Now, in the first couple of years, obviously that you can't, if you grow from, the first couple of years, you're going to have significantly higher income growth than future years, right? Because you're growing from zero or almost zero. So your numbers are going to be a lot. If in my first year I have zero and then I grow to $60,000, I've grown by 60,000% or whatever the number is, But as we get into it, we want to grow by 20% as far as income goes, and we want to grow by 10% as far as expenses go. And this has really driven all of our other decisions, right? If these two things are happening, then we're succeeding. So let's look at our growth over the course of the 9 years that our business has been open. And the first thing that I want you to see is just how straight this line is. There are not big movements in this line every single year. First year, we wrote about $500,000 of business, right? Second year, we wrote about $800,000 of business. Third year, we wrote about 1.5. We had a big jump here in this third year, really from 800 to we almost doubled, right, in the written business that we had. It doesn't look like that on the graph, but it was a really big jump here. And this is really where we started to bring some team members on, bring some service members on, because we're starting to now, instead of just being a mom and pop business, we're starting to have more and more employees. In year 4, now we've written $2 million of business, right? More people are coming on. Then about 2.9 million in year 5, a little over 3 million, and then 3.5. And in year 7 is where we really started niching. Year 6 and year 7 is where we said, you know what? While we have personal home and auto insurance in our local area, Bloomington, Indiana, we still do a ton of that and do very well with that. We want to start a commercial insurance niche. We want to niche down and be very specific in what we do in commercial insurance. And we focused on commercial real estate. We built a commercial real estate program that is a national program. And now you're seeing sort of in these years exponential growth. So going from 3.5 to 4.5, right? Over $1 million of written premium. And then in this last year, we wrote about $2 million of written premium there. So that's the bottom line. And you're seeing exponential growth over the course of the time, but you're not seeing, big, huge leaps. Remember, we're not taking any money in. We're not taking out big debt. We're really growing a business, a couple of employees at a time, training those folks up, making sure that we're really thoughtful and getting things done. And so in year 9, the year we just ended, we are almost to $6 million in written premium, and that is how we have grown. But this video is about more than just written premium. I think that a lot of agents speak in written premium, especially when you're a newer agency. And I want you to shift that mentality, because revenue is actually much more important than written premium. You can write all the premium you want, but if you're only making 10% commission as opposed to 20% commission, you're making half as much money on the same amount of written premium, right? So revenue matters more than written premium. And I think it's important to start talking in that language. In general, inside of our agency, our revenue averages around 13.5% of the written premium amount. Obviously, each policy is different, but that is generally where our revenue is. And like I said at the beginning here, start thinking in revenue, because that's what matters. For example, our commercial real estate niche. In a lot of places, that means we're writing excess surplus policies that can be 10, 12% commission, as opposed to other types of business where you could literally be making 20% commission. So we've made a choice to go after business that sometimes has a lower commission because we believe in the end it's more profitable because the numbers are higher, right? The premium itself is significantly higher in commercial real estate than a lot of other niches. And so while the commission is lower, the numbers are higher and it balances itself out. So those are choices you just have to make as an agency. Now, I also want to think about expenses. We talked about revenue and how we're going to bring in revenue, but in the end, expenses is pretty important too. This is what it costs to run your business. The number one expense you will have as your business grows is human resources, the people who you are paying to do service work, the commission you're paying out to your producers. These are the expenses, the technology, your office if you have one, all those kinds of things are going to feed into your expenses. So we look at revenue and we look at expenses. And then we talk about profit in between, right? So this is the most important metric of all, and this is the space between revenue and expenses. So let's dig into our graph. If we look at that graph, instead of in written premium, we look at it in revenue and expenses. So now I should have a caveat here, which is how you pay yourself as the owner can be done in a lot of different ways. And I've created a video on how we pay ourselves as owners, but that's a key piece to this separation between revenue and expenses. In this particular chart, most of what we pay ourselves is not included in the chart. It's the profit part, right? So as an owner, you can pull part of your profit and that's how you pay yourself, or you can pay yourself a salary. That would be another way to do it. So there's multiple different ways to do it. And obviously that affects the chart here. So we see the revenue, and that is, right here, basically exactly the same as the written premium, just around 13.5% of that, right? So we're seeing revenue going up in that way, and then we're at about $800,000. Hopefully in the next year, in 2023 for us, as of this recording, we're going to cross over $1 million in revenue. That is our goal. That's a pretty big goal, but we think we're going to be able to get there. If we look at our expenses, this is what matters, right? The space between revenue and expenses, right? We see year 5, really nice space between, but then we decided that we really wanted to grow our team. In year 5, we were pretty slim on the team, right? We were growing our written premium, growing our revenue, and we kept our expenses low, which was nice. But then we decided, hey, we got to grow our team. So we had some growth going on there. And you can see that while our strategy for written premium stayed the same, or excuse me, for revenue stayed the same, our expenses increased. And so that gap between was shrinking. Now we're seeing that gap between, especially in year 8, we saw a big jump in that gap between, right? The profit is much better and that's good. And then here we're seeing those continue to expand. So the average growth when it comes to has been right around that 20%. In this last year, we did 35% growth. The expenses has been a little higher than we wanted. So 10% growth is what we wanted to see, and that would keep this sort of separating further and further apart by about 10% every single year. You're seeing a lot more variability in the expenses as we bring new people on and then work them through a year or two and then bring new people on and so on and so forth. So every time we expand our team, we oftentimes will see a decrease in the separation between revenue and expenses. So just wanted to share that with you. Look, everybody, all these YouTube videos are like, oh, we're growing so fast, da, da, da. This is real growth. This is something I'm proud of. This is growth that I feel like has kept my family safe. We have not taken huge risks. And at the same time, we are now 9 years in seeing the fruits of our labor in a way that we haven't in the past. We did fine for the first 5, 6, 7 years. But now it's really starting to come together as a true business. And I'm really proud of that. So for you, if you're still watching this video, you don't have to grow by millions of dollars in 1 year. You just have to create a plan that works for you, your family, and your business. And that's what is the most important here. So what is your trajectory? Right now, I'd love you to leave it in the comments. Tell me, where you're at in your journey, what size your book of business is, what you're hoping for in the next 5 years. I think it's an important activity to decide what that is. And if you need some help growing your agency, you can go ahead and click the button right there. Go over to Shine Insurance, and My Next Million in Insurance is our program to help you grow your agencies in a variety of different ways. You can study that there. All right, until the next next time, have a wonderful day.